Hi guys, and welcome back to the Caribbean Spot. In today's video we are covering Trump's 5% remittance tax, a direct hit to the diaspora. What if I told you that the money you sent to your mother in Jamaica, to your grandmother in Antigua, or to your children in Grenada could soon be taxed by the US government? Not a fee from Western Union, not a charge from the bank, but a 5% tax taken by law just because you're not a US citizen. That's exactly what's inside Trump's new proposal. A 5% remittance tax that targets non-citizens sending money out of the US. This would impact Caribbean families, African households, Mexican villages, and millions of immigrant workers, students, and legal residents who support loved ones abroad. It's not a conspiracy, it's written in the bill. And today we're breaking down what is this tax, who it targets, how it would be collected, and most importantly, how it would impact the Caribbean and the wider diaspora. Let's get into it. The Trump-backed proposal is part of a broader bill nicknamed the One Big Beautiful Bill. Inside that bill is a policy that would place a 5% federal excise tax on every dollar sent from the US to another country. Here's the catch. It only applies to people who are not US citizens. So if you're sending money to family back home and you're an immigrant worker, a green card holder, a visa holder, whether it be student visa, H-1B, H-2A, whatever it is, right? You would be hit with a 5% charge by law just to send money home. This is not optional. This is not a rumor. This is a mandatory federal tax targeting immigrants and foreign workers just for helping their families survive. But is there more to this? How will this tax be collected? Well, it will be collected at the point of transfer. The 5% tax will be automatically added at the moment you send your money. Whether you're using Western Union, MoneyGram, Zelle, whatever it is, right? Bank transfer, the tax will be applied right at the source. If you send $500 to Jamaica, you would spend $525, and the $25 goes straight to the US Treasury. The service providers must enforce it. All money transfer companies, whether banks, apps, or wire services, will be legally required to collect and report this tax. They must add the 5%, collect it from the sender, and remit it to the IRS quarterly. If they don't, they face legal penalties, audits, and shutdowns. Only US citizens are exempt, again. But how will they know? Well, according to the bill, only US citizens are exempt from the tax. That means everyone else, green card holders, visa workers, legal residents, get taxed. But here's the key question. How would they know if you're a citizen or not? Here's how it would work. Online, you may have to upload a passport, probably a social security number, citizenship certificate to verify your exemption. In person, you may be asked to show government ID, again, proof that you're a US citizen and that you are a verified US sender. If you're not verified, you'll be automatically taxed as a non-citizen, no question asked. This system won't just tax your money. It could track your legal status, build a profile, and flag your transfers. Some are now asking, is this really about taxes or about digital surveillance of immigrants? Okay, so the next part to this is there's no minimum. Every dollar gets taxed. There's no exemption for small amounts. Send $20, tax. $75, tax. $1,000, tax. Every dollar, every time. All transfers must be reported to the IRS. Money transfer companies must report to the IRS who sent the money, how much, where it went, and whether or not you were taxed. So now every remittance becomes a government data point. Every transfer, every family, every dollar tracked. Now, before we get into how this affects the Caribbean, Mexico, and Africa, let me make something crystal clear. This is more than just a tax. This is about data, control, and surveillance. Because when you're asked to verify your citizenship, when your name, transfer amount, destination, and legal status get logged, that's not just a transaction. That is a digital file. That's a surveillance trail. That's a watch list through your wire transfer. Every dollar becomes a data point, a signal, a spotlight, a digital fingerprint that the government can trace. And for US citizens who think they're safe, let me warn you too. You're not off the hook. Because when tax time comes, the IRS wants to know, did you have a foreign bank account? Did you send money overseas? And that's not just curiosity, that's legal tracking. If you're regularly sending large amounts of money abroad, your transfers could raise questions about unreported accounts or offshore interests. Even US citizens may be required to file extra forms like the FBAR or the FATCA. So don't think this system is only watching immigrants. It's watching everyone. This isn't just about dollars anymore. It's about data and who they're building files on. Global impact, the Caribbean, Mexico, and Africa. Let's talk numbers. Because this tax doesn't just touch your wallet, it shakes entire nations. Let's start with the Caribbean. The Caribbean will be among the hardest hit. Jamaica receives over $3 billion a year in remittance, nearly 17% of its GDP. Haiti, around 24% of its entire economy, comes from money sent home by loved ones abroad. Smaller islands like Dominica, St. Lucia, Grenada, they depend heavily on these transfers. This isn't extra cash. This is money for food, medicine, school fees, rent, and survival. A 5% tax on that, you're cutting off the lifeline. Mexico. Mexico received over $63 billion in remittance in 2023. It's the second highest in the world after India. That money keeps millions of families afloat in small towns and rural communities. A 5% tax on that, that's over $3 billion lost. Straight out of communities that rely on it to eat, build homes, and pay hospital bills. Even Mexico's president has called this tax unjust and unacceptable. Now let's take a look at Africa. The sub-Saharan Africa received $54 billion in remittance last year. That money exceeds foreign aid and investment combined. Nigeria alone received $19.5 billion. Smaller countries like the Gambia rely on remittance for 20% or more of their GDP. Families use that money for basic needs and to build businesses. Take 5% of that away, and you're not just taxing the diaspora, you're crippling progress. And don't forget, Africa already faces the highest remittance fees in the world. This tax would make things worse and could push senders towards underground or risky transfer channels. What the experts are saying. Global institutions and financial experts are sounding the alarm. The World Bank, IMF, and Electronic Transactions Association say this tax could push people to use illegal, unregulated money transfer methods, destabilize vulnerable economies, backfire by increasing illegal migration, and make it harder to track criminal transactions. The irony? You claim to want security and control, but you're pushing money on the ground. You say this is about taxes, but it looks a lot like tracking people instead of helping people. Trump calls this the one big beautiful bill. But for millions of immigrant families, it's one big betrayal. But let's step back and ask, what's really driving this proposal? From the US government's perspective, this 5% tax is being introduced as a way to generate revenue to fund domestic priorities, a tool to discourage undocumented immigration, and a means to tighten oversight of international money flows. Supporters argue, if you're working in the US and sending money abroad, some of that should stay here. Well, they pay taxes, so I think a lot is being kept in the US. You know what I mean? And that tracking international transfers can help fight fraud, trafficking, and terror financing. So yes, from a policy standpoint, this is America protecting its own interests. But here's the other side. For millions of families across the Caribbean, Latin America, and Africa, don't forget Mexico, this doesn't feel like protection. It feels like punishment for helping their family survive. Because when green card holders are taxed, work visa holders are taxed, international students are taxed, and even US citizens are being tracked, the line starts to blur between security and surveillance, between taxation and targeting, between policy and personal sacrifice. So here's the real question. Can a country secure its borders without hurting the people who are already inside? Can you regulate money without penalizing compassion? Millions across the diaspora are watching closely. Because if this becomes law, it won't just change how we send money, it could change how we're tracked, taxed, and treated. What do you think? Should this 5% remittance tax be stopped before it becomes law? Share this video with every Caribbean, African, and Latin American friend you know. We send money not for luxury, but for survival. And if this proposal passes, the people who send and the people who receive will all feel it. This isn't just about money, it's about data, about dignity, about who gets watched and who gets taxed. Subscribe to the Caribbean Spot for bold, fact-based Caribbean commentary. Stay informed, stay loud, stay free, stay prayed up. Until the next one. Bye.